Hello, I'm Ant Joblin and welcome to Pink Diamond, the show that digs deep into the pink sheet and small cap markets to find diamonds in the rough. With news that Tesla has become the world's most valuable car maker, a fresh focus has fallen on the electric vehicle sector again. Today's in-focus company, Adomani, is a provider of new zero-emission electric vehicles based in Newport Beach, with a market cap of $17 million. This firm attracted a peak investor interest online over the past fortnight, according to our proprietary Trackstar data. On top of producing zero-emission electric vehicles, the firm also is a provider of zero-emission electric drivetrain systems for integration in medium to heavy-duty commercial fleet vehicles, as well as repower conversion kits for the replacement of drivetrain systems in combustion-powered vehicles. Adomani's mission statement is for its zero-emission electric vehicles to focus on reducing the total cost of vehicle ownership, help fleet operators unlock the benefits of green technology, address the challenges of traditional fuel price cost instability, and local, state, and federal environmental regulatory compliance. Recent company headlines include the delivery of an all-electric logistic van to Snowcap Community Charities in Portland, Oregon, the resumption of operations at its corporate offices and locations, the signing of a letter of intent to purchase, assemble and distribute EV transportation services, Firefly ESV vehicle, and a commitment to fulfill a purchase order from an established law enforcement electronics vendor. Additionally, the firm recently announced its membership in the National Zero Emission Truck Coalition, a diverse group of stakeholders across the clean commercial vehicle supply chain advocating for federal investments. Looking at the company's financials, we can see the effects of COVID-19 potentially having had a negative impact on the firm's financial ratios, with CEO Jim Reynolds explaining that the lockdown had led to a multi-million-dollar backlog in order flow. Interestingly, however, when we look at the long-term trend for sales, the firm has grown steadily each year since 2015, when it had no revenue at all, to 2019, when sales hit $12.5 million. Additionally, operating expenses have collapsed since 2017, when they peaked at $22 million, to $6 million in 2019. Chart-wise, the firm has moved off its all-time lows at $0.0005 a share made in mid-April and is now trading at $0.0065, having found some support around $0.001 per share. Momentum initially tracked the stock's push higher, edging into overbought territory, but a slight divergence saw it dip before becoming poised to push higher once again. 50-day moving average is trending higher, offering potential support to the stock price, while the 200 sits above at $0.0182, potentially capping a return to pre-corona levels. The stock has been on a long-term downtrend since it first listed in 2009, but with a long-term upward trend in revenue and potentially having locked in a low, investors might be starting to see some upside potential for this stock. As always, make sure you conduct your own thorough due diligence before making any investment decisions. We'll see you next time.